Cash deposits. Cash deposit may be in the bank or in a non-bank entity. Deposits made to a non-bank entity, say to a lessor, or security deposit, cannot be used or withdrawn on demand. Thus, the deposit is a long-term receivable, given that lease contracts are normally long-term. Deposits made to a contractor or advances to contractor are short-term or long-term receivables, depending on the period the deposit is returned or refunded. To emphasize, deposit in non-bank entity is not cash, because it cannot be used on demand. Meanwhile, if the deposit is made to the bank and a demand deposit, then it is presented as cash. Examples: savings account, checking account, and mutual fund account with checking privileges. Meaning, the depositor can issue a check to use the account. If the deposit is a time deposit, or also known as a fixed deposit, it is not cash. It is a short-term highly liquid investment, and presented as a cash equivalent, instead of cash. What if the bank deposit is in foreign currency? If the bank deposit is denominated in foreign currency, it is still cash. At each reporting date, it must be translated at the closing rate, since cash is a monetary asset. This is per PAS 21, the effects of changes in foreign exchange rates. Per PAS 21, monetary assets denominated in foreign currency are translated at the rate current at the reporting date, or the closing rate. What are monetary assets? Monetary assets are those stated in a fixed amount of money. Examples are accounts receivable, and of course, cash and cash equivalents. If the deposit is in a foreign bank, and that deposit is not restricted, then it is part of cash. If that deposit is restricted, it is usually presented as other non-current asset, since cash is not restricted for use. If the deposit is in a bank that had closed, then it cannot be used upon demand. In this case, it is presented as receivable from Philippine Deposit Insurance Corporation for the first 500,000. The amount in excess of 500,000 is a claim against the asset of the closed bank. To recap, here are the points discussed. Question number 3. For the period ending December 31, 2019, Miles prepared the following schedule. Let's have the requirement first. For the period ending December 31, 2019, what amount shall Miles report as cash? We're looking for cash. Pause this video and analyze the data first. Then, we will analyze together. Are you ready? Coins and bills on hand, these are cash. Deposit made to Renee Events. Renee Events is a non-bank entity. This is not cash, but a short-term receivable, since it is refundable next month. Cash in Metro Bank, a demand deposit. This is cash. Time deposit in Metro Bank. This is not cash, but a cash equivalent. Foreign currency deposit. This is cash. Per PAS 21, as a monetary asset, the $2,500 are translated at the closing rate. Meaning, the December 31 exchange rate of 48. 2,500 times 48 is 120,000. Cash in Bank of the Nation is cash in a closed bank. This is not cash, but a long-term receivable. Let's add 10,000 plus 150,000 plus 120,000. The answer is 280,000. Bank overdraft. Bank overdraft. Bank overdraft is a negative balance of a bank deposit account. If not stated in the problem, the overdraft is not offset against the positive balance and not presented as part of cash. Instead, it is presented as part of liability, or normally, accounts payable. Say we have cash in bank of $8,000 and accounts payable balance of $10,000. The company made payment of $10,000 and prepared this entry: debit, accounts payable of $10,000 and credit cash in bank of $10,000. After the payment entry, cash has a negative or overdraft balance of $2,000, while accounts payable now has a zero balance. The $2,000 overdraft is not presented as part of cash. What does it mean? It means that the negative presentation is not allowed, and we need to adjust this balance. So, our adjusting entry is debit cash in bank by $2,000 and credit accounts payable by $2,000. After this adjustment, our cash in bank is now at zero, and the unpaid portion of accounts payable is restored. To recap, it is not part of cash, since cash is now at zero balance. And we now have an accounts payable balance. Repeat after me: not cash, but accounts payable. Now, say we have two banks, Bank 1 and Bank 2. When Bank 1 has a positive balance and Bank 2 has a negative balance, the balances in the different banks shall not be offset. Meaning, the negative balance is not part of cash, but presented as accounts payable. Like earlier, we need to adjust the overdraft through this entry, and we have the same effect as this one. In another case, if we have one bank with two bank accounts, Account 1 and Account 2, and Account 1 has a positive balance, while Account 2 is overdrawn, the balances can be offset against each other. They can be presented at net amount. Meaning, unlike the case earlier of two accounts in two different banks, this one is presented as part of cash, and the account payable is fully paid. So, this adjusting entry is no longer needed. The negative amount is now part of cash, and offset against the positive amount. Let's illustrate. J presented the following deposit balances. Observe that BPI has two accounts, one of which is overdrawn. And we have BDO, another bank. The BPI positive balance of $20,000 and the other BPI balance of negative $3,000 can be offset, since they belong to the same bank. For this bank, we have cash of $17,000. However, the BDO negative balance of $5,000 and the net BPI positive balance of $17,000, now being from different banks, cannot be offset. Meaning, the BDO overdraft is not presented as part of cash, but presented as part of accounts payable. Accordingly, the correct balance to be presented in the financial statements is $17,000. One last thing about overdraft is a provision from PAS 7 stating that if the bank overdraft is repayable on demand, it is an integral part of the entity's cash management. A characteristic of such cash management practice is that the bank balance fluctuates on a regular basis from being positive to being overdrawn or negative. In this case, the overdraft that is repayable on demand is part of cash and cash equivalents, meaning it is offset against any positive cash and bank balance. To recap, an overdraft in a bank where another account has a positive balance is part of cash. An overdraft in a bank where a positive balance is maintained in another bank is not part of cash. An overdraft that is repayable on demand is part of cash.